Hello traders, this is Fawad Razakzada, market analyst for City Index. Today is the 20th of June 2024. Following the Bank of England's dovish hold, the pound has weakened as investors have raised expectations that the central bank is going to cut interest rates in August. So the cable has fallen, as too have other pound crosses, while the FTSE has risen. Couple of key levels to watch. 126.35 is the high that was hit in early May, which then gave way before the cable rallied to near 129 handle before falling back as the breakout couldn't hold above the 128 handle. So the failure above the 128 handle is what's kind of driving the market lower at the moment from a purely technical point of view. And for as long as it remains below that area, the short-term path of least resistance will remain to the downside. So in terms of other resistance levels to watch, 127.35-ish, this area right here, is where previously the cable had found interim support before giving way on Friday of last week. And that level was retested in midweek and it held as resistance, leading to fresh weakness. So on the downside then, I mentioned 126.35. If that level were to give way, then we could see a potential drop to a more significant support zone between 125 to 125.50, where we also have the 200-day moving average converging with prior support and resistance zone. So following the Bank of England's rate decision, we've also seen a bullish breakout on the FTSE. It has taken out resistance at around 8,210, where it had previously found resistance from, where we also have the resistance trend of this bull flag pattern converging. Today, we are pushing above that level, so a closing break here could potentially pave the way for fresh gains towards the May's all-time high at just below 8,500. The FTSE's rally has been supported by rising oil prices, and we've also seen metals prices rise as well. Now, it's worth keeping an eye on the Nasdaq 100 as well. It has had a major rally. Today, however, it's coming off its earlier highs, finding resistance at around the 20,000 level. It got there for the first time ever before pulling back. The trend is quite strong, so a bit of a pullback to allow overbought conditions to be worked off cannot be a bad thing, unless, of course, we see significant technical damage, in particular if we go below a major low, for example, 18,188, this low right here that was formed at the end of May. Unless we cross below that level to create a lower low, any short-term weakness we see in the interim could be seen as just a normal retracement inside a strong bullish trend. Crude oil is continuing to push higher following its V-shaped recovery last week, and the fact that it's broken several resistance levels means that the short-term path of least resistance remains to the upside, with the next potential resistance coming in at around 81.65 area, which is the 61.8% Fibonacci retracement level of the downswing from the April high. That level is important to watch, and around that area we've got the round figures like $82, $83. Those levels should offer some short-term resistance as well. On the downside, key support now comes in at around 80, which was prior resistance. We've broken above that area this week. So I would imagine any retest of this level should hold as support, at least in the short term anyway. Gold and silver prices have also rallied today, and at the time of recording, it was testing potential resistance at around 2350-ish area, where the resistance trend of this bull flag pattern comes into play. Likewise, silver is approaching its own trend resistance of the bull flag pattern after bouncing from this long-term bullish trend line at around 2870-ish last week. Subsequently, we've seen the breakout above the $30 level. Let's call that $29.80 to $30 area, where previously silver had found resistance and support from. So this area is now going to be interim support on any short-term dips. I think the path of least resistance is still to the upside on silver, given the big breakout we saw a couple of months ago. But I think in the short term, there is a risk that we could see a continued consolidation until we have a clear sign that the bull trend is about to resume. And judging by this week's price action, we may have seen early indications that a new bull trend may have resumed here. Now, for more market analysis, make sure to check out the news and analysis section at cityindex.com. I'll see you in the next video. Take care.